This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial endowment expert, Harold Siegel. We're taping the show on May 10th, 2013. Our time is 8:39 in the morning, Mountain Time, and it's Mother's Day weekend. We say Happy Mother's Day to all the moms, including my mother, Laura. As we get into today's show, rather interesting to note that in the United States, they have 11 million people now collecting disability benefits, more than the population of Greece. But remember, everything is okay in the United States. We had that jobs report last week that a lot of people just basically said was a total farce. It was interesting to note there was a big drop in hours worked. In fact, shorter work week was equivalent to 500,000 jobs lost. One of the things that really came out this week, Harold, was the currency war crisis started again. Of course, we know that in Japan, they're trying to fight off deflation with heavy quantitative easing. And this week we had the Japanese yen basically at par with the U.S. dollar. And everyone was very surprised that the Reserve Bank of Australia cut its benchmark interest rate to a record low. And we're seeing other countries such as South Korea and India joining the fray. The reason they're doing it is currency wars. They do not want a strong currency. And Harold, one thing you had said all along when we started doing the show together back in 2002, and you started in 2001, we would see volatility as this bull market in hard assets moved on. We're seeing volatility today. But from all the information that we have in our newsletter and what we'll talk about on today's show, the truth of the matter is nothing has changed. The fundamentals have not changed one iota. If anything, they have gotten better. The sentiment may be at times right now for some negative, but we've got some stories that we want to talk about regarding precious metals that will really open up a few eyes. So stay tuned for that. But Harold, currency war is back, and that means that you're going to see easing, and I think it's a positive for hard assets.
It has to be. Again, very confusing times for most people because, again, they just don't understand what's happening in the marketplace, and that's certainly understandable because most people couldn't understand how in the world these type of scenarios happen. How in the world does oil go up all week long, get all the way up to $96, and then drop $2.50 on Friday? With no report or nothing coming out that's detrimental to the oil market. Why does gold hold in there all week long, and then on Friday, as we're taping the show, we're down $35 for absolutely no apparent reason? In fact, one of the articles in the newsletter this week, talks about gold and to throw at the technicals because it just doesn't mean anything anymore. You look at the support and resistance levels and you see what's happening in these markets, and you got to just sit there and scratch your head. However, I'm going to shed some light on what happened in this market before under very similar circumstances, and maybe we can gain some solace in understanding, what the market has done in the past and what we think it's going to do in the foreseeable near future. As we're taping the show today, gold had a good week all week, and now it's down $35 on Friday. The market right now is trading at $14.24, basically trading in a range, but what we need to watch right now basically is $13.50 silver, $13.50 in gold, and then $12.50 in gold. $12.50 is a very, very important number for gold. Basically, that's production cost at this particular time. Silver's down 44 cents at $23.41. We want to see silver hold the $22.50 level and then $21.50. And even if they didn't hold those levels, then it drift a little further. I think what I'm going to show you next is going to make you feel a little bit more comfortable. Platinum down $25 at $14.86, and palladium down $9 at $7.04. The Dow opened up stronger this morning, but is now down 27 points at 15,055. NASDAQ up 6 points at 3415. You've got the Toronto Stock Exchange up 23 points at 12,566. One of the problems today and yesterday was the U.S. dollar. The U.S. dollar is up 47 cents at 83.15. And crude oil, as I mentioned before, for no apparent reason has dropped $2.50 today, down to 93.84. We're still very, very bullish on crude oil. I think a lot of the moves right now are moves that when oil gets too high, they purposely bring it down because it affects the recovery in the United States. But again, I just don't see the recovery. I'm a Canadian living in the U.S., and I am a financial person. I watch all the financial markets and everything for a hint to see what's going on, and there appears to be no sign that the U.S. economy is getting better. The only thing that people are looking at this point is the fact that the stock market, the Dow Jones, is hitting record numbers, but they don't understand why. The reason for it is that there's $85 billion a month being put into the stock market through the Federal Reserve. It's called quantitative easing. And again, what it's eventually going to do, it's going to wreak havoc on the markets. What we're going to see as they continue to print more and more and more money, and what Randy brought up at the beginning of the show, was the currency wars. The Japanese are purposely deflating their currency in order to eventually bring on inflation. So if that's what Japan is planning on doing and it's working for them, the same thing is really happening in all other currencies, because in the U.S., we've seen the U.S. dollar go from the strongest currency to one of the weakest, and if the Japanese yen and the U.S. dollar are even at this point, it just goes to show you how much they're playing with the currency market. Japan is purposely trying to inflate their economy, and that eventually is going to happen in the United States and all over the world. So again, we need to get through these confusing times, but let me take you back to 1975. And by the way, I have all the charts here, so anybody who's interested in this can certainly call for free information. And again, I'll get these charts out to you and show you, what happened back in the mid-70s is very similar to what's happening at this particular point. If you look at gold, it went from $35 in 1972 all the way up to about $200 by 1975. In fact, in March of 1975, we were just below the $200 level. So gold had made a significant rally all the way from $35, broke 100, went to 150, and basically by 75 was trading right under the 190 level. So very similar to what we saw in this bull market, where gold, went from basically $250 up to $1920, we saw similar price movements percentage-wise back in the early times in the mid-70s. So by 1975, gold was up to almost $190 in March of 75. However, by October, it was down to $130. That was a $60 drop. Now, $60 drop, we've seen $35 today alone. But in all respect, gold was at $190, and a drop down to $130, a $60 drop, was basically 30% drop in the marketplace. So you saw gold go from $190 down to $130. That signified a 30% drop in the marketplace. Then by 1976, the market had gone from basically that 130, 140 level in January all the way down to $100 by September of 1976. So basically in 1 year, we saw gold drop from 190 all the way down to 100. You saw basically a 50% drop in the price of gold. That's not that much different than what's going on right now. In fact, when gold hit 1920 in 2011, it's now 2013, and the market is down to around the $1,400 level. So a $500 drop basically was about 40%. Now, once gold hit $100, then the market started to rally. Things started to change. There were shortages in the market, that type of thing, and all of a sudden, gold went from September, where it hit 100, and by December was back up to $135. So you saw a 35% increase in the price of gold in a matter of 2 or 3 months. That's significant. Then by 1977, the market started to rally. Again, we saw at the beginning of January, the market went, from about up to 135. It dropped back down to 120. Then by April was trading back up at 150, 155, and by November was trading back up at $165. So we basically saw a 65% increase in the price of gold. These are significant moves between January and November. And then 1978 came around, and the market got up by November back up to 245. So it started to move back over that $200 level. And then by 1979, gold had fluctuated, dropped to around 200 in that area, and then started its monumental rise. And by October, went from 200 up to 240, a 20% increase. And then by the end of the year in December, the market was up to $520. So it went from $200 in January to $520 by December. So in 1 year, the market basically went up over 200%. And then by 1980, the market went from around 580 all the way up, and that was in January. And before February, the market went from 580 all the way up to $850 in a month. And then what happened in 2011 is very similar to what happened in 1980, when all of a sudden gold dropped from $850 and dropped all the way down to $620 in a matter of a few days. The reason for that is that the warehouses in New York where they keep gold, because everybody was starting to speculate in the gold and silver markets at that point, and things started going a bit crazy. And when the market got up to 850, they closed the market for 2 days because they couldn't work out the outstanding futures contracts versus the physical market. They just didn't add up, and they closed the market for 2 days, and when they reopened it, the market plummeted from 850 all the way down to 620 as people were clamoring to get out of the marketplace, and then, the situation started to go south from there. So in actual fact, the market's back in the mid-70s, which was the time that we always refer to when talking about gold and silver with inflation coming into the market and the whole thing. It's very, very similar to what happened at this point. So again, looking back at history, you always learn from it, and history tends to repeat itself. And if we don't learn from history, then shame on us. But again, back in the mid-70s, it is very, very similar to what's happening in the marketplace at this time, and gold ultimately ended up fighting off everything, all the negativity during that particular time. And if you go back to the headlines, going back into the mid-70s, they're almost identical to what was going on right now. They were trashing gold and silver. They were saying that the move in gold and silver was over, and basically gold kept on going higher and higher. It went from 100 to 200 to 4 to 5 to 6 to $850, very, very similar to what's happening at this particular point. So I'm hoping that this brings us a little comfort. Those of us that are sitting in physical gold and silver are just sitting back and waiting for the market to do its thing. Throw out the technicals right now, because the technicals don't mean anything. Not when you've got the Federal Reserve and certain banks that are allowed to do things in the market that other speculators are not allowed to do. What you've got right now is an unbelievable situation in the marketplace in gold and silver. Something that makes no sense to most people, but eventually it's going to work in our favor. And that's the supply and demand situation in the gold and silver market. There is absolutely no doubt that all over the world, people are buying physical gold and silver. We see the reports, we see the news, and we see people lining up in which to do so. So for the first time in an awfully long time, you've got people that are throwing away the technicals, standing in line to buy physical gold and silver because there's massive shortages of it, because people aren't stupid. The fact is that when the demand is high and the supplies are low, the prices always go higher. Why is it different at this particular point? It's only because the government right now is in a very dangerous position. They don't know what to do, so it's like putting Band-Aids on open heart surgery. They're just taking care of the situations as they pop up, and they're going to deal with the bigger picture as they have to down the road. So the bottom line is, if you're sitting in physical gold and silver and you're frustrated as we get from time to time, request the charts that I just showed you. Let me send those charts to you totally free of charge. I want you to see what I'm seeing, and maybe that will make you sleep better, a little bit better at night, understanding that this has happened before, and what happened before resulted in a good situation for us, and I believe the same thing is going to happen this time. When all the dust settles, we're going to come out on top. And what they're doing right now in the marketplace, Randy, which is sickening at times, is they're chasing out the speculators that are in the gold and silver market. By the markets reacting the way that they are at this particular point, what the speculators and the banks are doing is they're chasing the speculators and the futures traders out of the market. So basically, you don't have a lot of buyers that are buying paper gold and silver. They're all buying physical gold and silver because they're sick and tired of seeing these markets manipulated. So basically, when you own the actual physical metal, you can throw away the charts. It doesn't matter anymore. Just sit back and let the markets do its thing. With what's happening in Japan and in the U.S. and in Europe, there is absolutely no doubt that things are going to work out our way. Right now, what's happening is that confusion in the marketplace and fear in the marketplace is making the markets do what they want. And the mainstream media is talking down gold and silver. But they did that back in the 70s also, and everything worked out fine. So again, I'm very confident that we're in the right markets at the right time. Gold, silver, diamonds, and vintage cars, all those type of assets are going to continue to do extremely well. And there is no doubt in my mind, none whatsoever, that by the time all the dust settles, 3, 4, 5 years from now, just like happened in the mid-70s to 80, we're going to see a massive rally in gold and silver when you least expect it, and a lot of it is going to be to do with inflation, weak currencies, and shortages in the gold and silver market.
The company that Harold recommends you use when it comes to investing in precious metals, Worldwide Precious Metals. The thing that's so important about dealing with them, they're the experts in this very specialized market. This is all they do. Eat, breathe, sleep precious metals. They've been around the entire time of this bull run. Since Harold and I have been doing the show together for over 10 years, we've seen a lot of ups and downs. Ultimately, we've been going up. Worldwide has been there along the way. They can help guide you. The telephone number, 1-866-623-2002, 1-866-623-2002 to connect with them. Their website is wwpmc.com. Listen to our radio shows. As well, get our free weekly newsletter from Worldwide. We're going to keep you informed as to what is happening in the market. Now, please keep in mind when you're dealing with Worldwide, you're dealing with people that are experts in this very specialized field. They're there to help you maximize profit, minimize the risk, and they have recently reduced their fees to help you make extra purchases. So start your own precious metals investment account. Now more than ever, they want to help you. And we're hearing these stories. They're in our newsletter. People lining up all over the world to get precious metals. Well, one of the great things about being a worldwide company like Worldwide Precious Metals, they have access to suppliers all over the world. Are you looking for precious metals? Gold, silver, platinum, palladium? They can help you with it. And please remember as well, this is all backed by gold. 100% gold and silver back up what you have 100%. No paper promises. Connect with Worldwide Precious Metals, 1-866-623-2002. Their website, wwpmc.com. There was one story this week from John Hathaway. He was interviewed by Eric King of King World News that I thought was so important. You can see it in the newsletter. He says, you hear about shortages of coins. Sometimes that can be attributed to the mints not having enough equipment. Bars, the same thing. I read recently that more than half of the gold which has been ordered has been on a delayed delivery of some sort. Everything I get confirms the activity is overwhelmingly on the buy side. So this pullback has not at all disheartened people who want to own more gold. In fact, they are just looking at it as a blue light special, and they are standing in line to buy. Sometimes you have to give the average citizen credit, and he's saying people should be given credit for their common sense right now. They can look at what's going on and say, this doesn't make sense. Money printing can't be good over the long term. They don't need CNBC or Bloomberg to tell them to go out and buy it. They are thinking for themselves. I mean, if anything, the media is dead set against gold right now. The fact that the public buying remains so strong, to me, is very, very significant. And if you look at the traders' commitments, they are extremely bullish. The smart money is on the buy side. In fact, Bill Haynes, who is a bullion dealer in the United States, says the largest wholesaler in the United States is sold out of 100-ounce silver bars. You heard right. They are sold out. And to add to that, and you can see these stories in our newsletter, the U.S. Mint is limiting purchases of the America the Beautiful silver coins. They're going to limit dealer purchases because of excess demand, and they don't have the inventory. Harold, we have about 2 minutes left in our segment, but now more than ever, you need to look at having hard assets in your portfolio. In the short term, they've been able to keep the house of cards, the Ponzi scheme going. But longer term, now's the time to speak with Worldwide Precious Metals, 1-866-623-2002, their website, wwpmc.com, because we're seeing strong physical buying all over the world. It will have an impact.
It has to. It has to. Again, right now there's a lot of money going into the stock market because of quantitative easing and what Japan is doing because they're trying to get their economy back on track after, 2 decades basically of recession, which is basically what's happening in the United States. They don't admit it, but the fact is that the middle class is suffering tremendously. So, again, let's just continue with what we're doing. Let's not get emotional about the markets. If you own physical gold, silver, diamonds, those type of assets, we're just going to get through these difficult times, and we're going to wake up one day, and gold's going to be up $200-300, and you'll see where it goes from there. But I'm positive gold is a great investment at this point.
1-866-623-2002 to connect with Worldwide Precious Metals, their website, wwpmc.com. And don't forget, when you have precious metals, it's stored on your behalf in a bullion account. If you want, you can take delivery of it. Instant liquidity in and out of the market with a phone call. You have secure storage insured to the full value of your investment, 24/7 online access, and you have the full-time use of a precious metals expert. And keep in mind, right now, if you're looking for physical precious metals, gold, silver, they have access worldwide to worldwide supplies. They will help you. One thing to keep in mind about the stock market, and this is very concerning from Jeffrey Sout. This buying stampede in stocks is now 89 days in length, which is historic. Buying stampedes tend to last 17 to 25 sessions, with only 1 to 3 sessions pausing or pullbacks before they exhaust themselves. There have been a few that have lasted 25 to 30 sessions, but it's rare to have one more go than 30 sessions. This one has gone 89 sessions as of this week. The next longest was the 53 sessions in 2010. The longest one before that, 38 sessions in 87. And he says, we all know what happened in October of 1987. Be very cautious on the stock market. We're going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on May 10th, 2013. Our time is 9:05 in the morning Mountain. We're on your favorite radio station. We're also online. You can listen to the shows archived online at hesradio.com, also rarecoloreddiamonds.com. We have a podcast through iTunes. Harold does daily market commentary on his website, and it's a podcast too through iTunes. All you need to do is type in World Financial Report on Radio. Harold's daily market commentary is there, and our radio shows are archived there as well. We are portable. We go wherever you do because we want to be there to help you obviously profit and protect the money that you have. And we have our free weekly newsletter. I really encourage you to get on the list. It's absolutely free of charge. You can go through it in 5 to 10 minutes. You can spend hours if you want. Speak with Harold or Worldwide about getting our free weekly newsletter. Worldwide, WWPMC.com, telephone number 1-866-623-2002, rarecoloreddiamonds.com, and the telephone number is 1-800-432-1022 for our free weekly newsletter. And when it comes to investing in precious metals, there's only one company Harold recommends you use. That is Worldwide Precious Metals. This week, our featured diamond, and this is a stunning diamond. It's a 0.96 carat radiant cut, fancy, vivid pink argyle. Absolutely stunning. The color on this, it was funny. Harold mentioned when we were just in our break there, he mentioned the color, and when I saw the diamond for the first time, I thought the same thing. A very dark, rich color. In some ways, it almost looks like a red. It is absolutely stunning. You can see it at rarecoloreddiamonds.com in the newsletter under the featured diamond of the week. Richard Russell, who's been writing the Dow Theory letters for over 50 years, wrote this week, "Unlike gold, diamonds are light and pack tremendous value in small, portable sizes. The big money is well aware of this, and the price of gem-quality diamonds keeps advancing at around 5% a year. The early Christie's auction this year was supposed to realize $35 million. It actually totaled $81 million. At the auction, a 34.65 carat fancy intense pink sold for $39 million. And that was for a single stone. At Sotheby's, an early auction totaled $53 million, the highest ever total for a spring sale. The top lot was a 74.79 carat diamond, potentially flawless, and it went for $14 million. Obviously, big money is investing in top-quality diamonds. It's concentrated wealth, which is portable. And Richard Russell, Harold, he spoke about diamonds before, but he's starting to wake up to the fact of what's going on with diamonds as well.
Well, it's very smart of him, too, because, again, when you look at the whole world economy at this point here, it's got to be one of the most important investments that you can make at this time. Because if capital preservation is key, you can't keep money in the bank. We know what happened in Cyprus. Banks are in trouble, and you don't want to keep more money in the bank. Plus, you're only getting 1 or 2% return on your money. So all we're doing at that point by keeping your money in the bank is not even covering the rate of inflation. And you're not making any money. And when we look at the banks, we say, okay, fine, even though I'm not going to make any money, at least it's safe to keep my money in the bank. Well, we know that that's not true anymore because in Cyprus last month, they stole 60% of depositors' money, and with the other 40%, they gave them worthless bank stock, and now there's nothing that they can do about that. I truly believe that Cyprus was just a test to see how the world was going to react to the money being stolen out of the banks, and now I think it's going to become mainstream because almost every bank is in financial trouble. They never recovered from 2008. So that's why diamonds are so important. Number one, they never lose their value, certain diamonds, so you've got capital preservation. Number two, instead of getting 1 or 2% back in the bank, and again, you can only keep in Canada $125,000 in an account. Anything over that you're putting to risk. A diamond, like for example the featured diamond, they go up by anywhere from 15 to 25% a year. 15 to 25% a year. In fact, the featured diamond, the 96-point radiant cut fancy vivid pink argyle, is one of the rarest pink diamonds you could ever get. That diamond will start to increase and start to double every 2 years. So we're talking about a diamond that can double in 2 years, and I don't know of any other investment in the world today that can give you that type of return with the safety that you have in the diamond market, because these type of diamonds never ever fall in price. And the reason for that is that this 96-point radiant cut, fancy vivid pink, comes from the Argyle mine in Australia. We all know that the mine is on its last legs and is not going to be around that much longer. They're trying to keep the mine open for another 2 years, but that's mostly to take out the white industrial diamonds that they use to cut other diamonds. They're just not finding the pink diamonds there anymore. So a diamond like this is like an investment on steroids. It does nothing but go up in value. In fact, I have clients that 5 years ago bought vivid pink argyles for $50,000. Now those same diamonds are $2 to $250. So this is what's happening in the rare diamond market. This particular diamond, just so you know, in 2011, the biggest diamond to come out of the Argyle mine was 2 carats, and it sold for $2 million. Last year, the biggest diamond to come out of the mine was a carat 32, and that sold for $2 million. What's going to happen in 2013? The diamonds are getting smaller and smaller. Well, here's a diamond that's pretty well a carat. It's the best color that you can possibly get. Vivid is the highest color grade that you can possibly get. And a diamond like that will do nothing but go up in value. In fact, very, very soon, that diamond is going to be a $2 million diamond. And right now, that diamond is in the $600,000 range. Now, you may sit back and say, well, gee, $600,000 for a diamond is a tremendous amount of money. But by next year, that diamond is going to be worth more than $1 million. And then the year after that, that diamond's going to start to double in value. The closer we get to the mine closing down, the higher and the higher and the higher these prices get. When Randy said that the color of this diamond is almost red, he's 100% right. And what you should also know is that red diamonds are the rarest diamonds in the world, and they start at $2.5 million a carat. So, again, we've been recommending diamonds on this radio show for going on 8 years now. Nobody even knew about colored diamonds till we brought them up to you. And the reason that I brought them into the forefront was because I'm familiar with their track record. Do you know that back in 1980, when gold and silver went to their highest levels, diamonds went up 500% in 2 years? 500% because of inflation. If we believe inflation is going to be a factor going forward, you want to own some diamonds because they will do the job for you. On top of that, they never decline in value. So what you've got is an asset that maintains its value. Worst case scenario is that we want to maintain our assets and not see them drop. If you go into the stock market, you're putting all of your money at risk, and we know that for a fact because in 2008, the market dropped from $14,000 down to $6,500, and there were stocks that were at $85 that ended up going to below $1. So when you put your money into stocks, you can lose every penny that you put in there. When you put your money into certain commodities, they're very, very volatile, and you can see tremendous highs and tremendous lows. But you don't see that in the diamond market. In fact, diamonds move up and have a track record. Argyle Pinks, the mine is going to close. They produce 95% of the pink diamonds in the world. You want to own Argyle Pink diamonds. They're amongst the best investments that you could ever make at this time. And we own the secondary market that resells them for you. We own our own auction business, H. Siegel Fine Auctions, and that's what we do. We resell our clients' diamonds all over the world. And we've just recently opened up, and we're planning on opening up. We're in the stages of it. By the end of this year, we will have offices in Dubai, in Hong Kong, in Panama, and in London, England. And the reason that we're doing that is for two major reasons. Number one is to bring on high net worth individuals that will buy our diamonds. And number two, because of the currency markets. If we held an auction right now in London, England, we'd pick up 40% on the currency because the British pound is worth 40% more than the Canadian and U.S. dollars. So that's what we do. We're in the diamond business. We're in the rare diamond business, and we offer our clients the best quality and the best investment diamonds in the world today. And then we resell them for you. And our clients will do tremendously well with these diamonds, and we get 10% of the profit. So we want our clients to do extremely well because we love our clients, number one. And number two, for selfish reasons. We're in business to make money also. And if we give you good advice and you make money, we deserve to make a little bit on it also. Consequently, if the trade doesn't work out, we don't make anything. But I can assure you, with what's happening in the pink diamond market right now, it's the best market in the world, and soon that mine is going to be closed, and the price of these diamonds will do nothing but skyrocket in value. The other diamonds that we recommend are yellow flawless diamonds. They have to be flawless, but they've got a track record also. They're not as expensive as the pinks. They start at about $15,000, but they increase by about 20% a year. They double every 5 years in value. In 10 years, a $20,000 investment today will be worth about $80,000 in 10 years from now. You take that same $20,000 and put it in the stock market, who knows what that's going to be worth? It could be in profit, it could be worth half, or it could be worth nothing. You want to put something away for your future. And what I'm saying is true, because if you look at your RSP, going all the way back 10, 12 years ago, in actual fact, go back to 2000, you'll see that you have not made money in your retirement savings plan for the last 10 to 12 years. And the reason for that is that the stock market has been extremely volatile. In 1999, it plummeted. In 2008, it plummeted. And now it's 2013, and we could see another huge drop in stocks as we're in another bubble. All the mistakes that they made in 2006, 7, and 8, they're making the same mistakes again. And I would not want to get trapped in this market again. If you're in your 50s or 60s or 70s and you have all your money sitting in paper assets, I would be very concerned about that, because you lose it, you're never going to make it back again. And if you want to one day retire, you've got to be diversified. I know that you're not going to totally sell out of your stocks, but you've got to look at your retirement savings plan and say, I haven't made any money in a decade. Maybe I'm just not doing things right. A yellow flawless diamond put away for your future in 10 years from now can be up about 400% from where your investment is right now. And I think that's an unbelievable return, especially when you see the risk in the markets at this time. The other diamonds that we recommend are flawless white diamonds. When I first brought them up, Randy was scratching his head, and he's saying, why are you bringing up white diamonds, when colored diamonds do so tremendously well? And then we started to educate you on what these flawless white diamonds do. They're very conservative. They go up by at least 15 to 20% a year. They're negative correlated to the stock market. Means in 2008, when the Dow dropped by 50%, these diamonds went up 50%. They never, ever declined in value. And now there's a diamond fund out there called the Diamond Investment Fund out of Luxembourg, and basically it's a very close friend of mine, a Swiss banker and lawyer, that owns the fund. It's the only one of its kind. And the reason that the banks in Luxembourg approved this fund was because of the track record of flawless white diamonds. They go up by 15 to 20% a year, except during times of high inflation and stock market volatility, and then these markets are on like steroids. They can go up 50% or more. So what this fund is going to do, it's going to offer flawless triple excellent white diamonds, and I know that for a fact because I'm the company that they're buying their diamonds from. And consequently, I'm the company that they're going to liquidate this fund through when the fund reaches its maximum potential. So through our auction businesses in Europe and Asia. So basically, we have a firm handle on what's happening in the investment business in diamonds, and these flawless whites are phenomenal investments. They're about 10 times as expensive as a normal white diamond. A normal 1-carat white diamond can sell for about $10,000 of decent quality. One of these flawless triple excellent whites can go for as much as $100,000 or more a carat. So again, they're very important assets to own. They're capital preservation at its peak. If you're concerned about holding on to your money, you want to have your money, some of it in diamonds. Now, you never put all of your investment money in one particular market. At this point, diversification is extremely important. I myself personally am a very conservative person. I don't trade anything that's risky. And basically, I own gold and silver, but I own it physically. And most of the gold and silver that I own, I bought under $300 in gold and under $4 in silver, and I've never sold it. I still continue to hold it. I do own some beautiful gold and silver coin sets. Some of them I've auctioned off just to get off our auction site going, but most of them I hold in a private collection. I also own my own collection of diamonds. I've had them put away for many, many years, and I do add to it. Many people have asked me, if these diamonds are such phenomenal investments, why am I selling them? Why not just hoard them? I am in the diamond business. I am in the investment business, and my job is to help my clients make money. And that's what I do, and I do a good job at it. The diamond market is on fire. And what we're going to see coming up in the foreseeable near future, most people have never even imagined before. You want to look at our selection of Argyle pink diamonds. Go to our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Look at the investing in diamonds section and look at the historical price tracking system. It will tell you where certain diamonds were 20, 30 years ago, where they are now, and where they'll be 10 years from now. Then go to our loose diamond section and look at our loose diamonds. You can start with our yellows. You're going to see when you click on yellow diamonds, we have 4 different colors: fancy light, which are known as canary diamonds, fancy yellows, fancy intense, and fancy vivids. Fancy vivids are the best color and the most expensive, and they are in tremendous shortages. To get a fancy vivid yellow internally flawless diamond today is owning something that you are not going to see in a few years from now, because there's very few vivid diamonds coming out, and the part of the mantle where these diamonds came from just don't exist anymore. To own a fancy, vivid, yellow, internally flawless diamond, they start at about $60,000, $70,000 a carat and go up from there, but these diamonds will start to double every 2 years very soon. The fancy light yellows start at about $15,000 a carat and go up from there. And again, these diamonds go up by about 15 to 20% a year. Then you go to the next color, which is our beautiful pinks. And when you pull up our pink diamonds, we're going to see fancy pinks, fancy intense, and fancy vivids. Fancy vivids, again, being the highest color grade and the most expensive. Those diamonds now double every 2 years in value. You're also going to see some fancy deep pinks. They're also very, very rare, and they're also included in the fancy vivid pink section. On the fancy intense, they're really beautiful bubblegum colored pinks, but they're slightly less expensive than the fancy deeps and fancy vivids. And then you got the fancy pinks, which are less expensive than the fancy intense, but still very, very valuable. And again, we've got all those diamonds for you. Then we've got our deep flawless whites, and you definitely want to look at those. They're phenomenal investments that will do nothing but make you money and protect you against a declining stock market. Then we've got some of the rarest diamonds in the world. Our red diamonds are the rarest. Our blues and greens are right under those. And again, our beautiful purple, we're the only company that has a pure purple diamond. It's just over a carat. It's a heart shape. It'll take your breath away. It's the most beautiful purple diamond you've ever seen, and that diamond is upwards of $1 million a carat. That's how magnificent these diamonds are. So, Randy, with all the volatility and everything happening and currency devaluation and playing around in the markets and everything going on, these diamonds do nothing but do good things for our clients. They maintain their equity, so you're not going to lose your money with them, but they go up in value, and during times of high inflation, they can be a home run because they've gone up 500% in 1979 and 80. I've never been more excited about an investment than I am what's happening in diamonds at this point, and I'm very proud, Randy, that we were the one company that brought this to the forefront, and now, we've got a lot of competition, but competition is good. Every corner's got a McDonald's, Burger King, and Wendy's. I just think that we blow away our competition because we're the only company that thought to create a secondary market to resell our clients' diamonds. What's the point of buying a diamond from a company that can't sell your diamond for you? And we only resell our own clients' diamonds. We do not sell diamonds from outside sources because we guarantee everything we sell 100%, and I cannot guarantee diamonds that come from other companies.
Truth is, though, Harold, the difference between you and them, you have a passion for diamonds. They don't. They're doing it because they heard, Harold Siegel's doing it, and, I guess we'll copycat him. But the truth is, Harold has an incredible passion for diamonds and helping people make money. This week's featured diamond, a 96-carat radiant cut, fancy, vivid, pink Argyle, absolutely stunning. And you can check it out at rarecoloreddiamonds.com. Connect with Harold at 1-800-432-1022. And I should mention, we've had quite a few auctions from Christie's and Sotheby's already this year. And if you would like to see some auction results, they will get you very excited about the diamond market. Speak with Harold about getting those auction results. We can send them to you. Next week, 2 more auctions. Sotheby's and Christie's doing some more auctions. We will have auction results for you. Also, Christie's in Hong Kong on May 28th. They have an absolutely stunning 75 carat briolette diamond. And this is an amazing diamond because it's a marquee cut, purplish pink diamond, suspending a 75 carat D internally flawless type, and this is, we're getting into the internally flawlesses that Harold's talking about. Briolette diamond, the pre-estimate on it, 8.5 to 12.5 million. Would not surprise me to see it go much, much higher. But when it comes to diamonds, no one is more passionate about helping you be in this market than Harold. RareColoredDiamonds.com, telephone number 1-800-432-1022. And Harold, there was two reports. We had a report from Bain and Company. Also, Nomura had a special report on the diamond market. Both were very, very bullish due to the demand coming out of the Far East, India and China. And if you would like to read those special reports from Nomura and Bain & Company, we can send them to you. They're in a PDF format, very easy to read, and they show you all the charts. And the future is so bright, Harold, for diamonds.
Well, I've never been more excited, Randy. Again, this is something that I've been into for a long time, but only brought it to the forefront about 9 years ago, and the whole diamond market is changing, and that's something that I'm very proud of because, again, we created that secondary market and we brought a lot of awareness, and now we're getting tons of interviews from financial firms all over the world that want interviews on diamonds. So we're on the Langolieri exchange, and then last week I did an interview with a company, a media company out of New York, and then I have another one coming up on Monday. So there's a tremendous interest in the alternative market for alternative investments, and diamonds are the best of them all. Again, look at what's happening in vintage cars. Cars that should be selling for $80,000 are selling for $200,000. The same thing's happening with diamonds. Diamonds that are supposed to sell for X are selling for 3 times X. So it's a phenomenal time, and again, I put a tremendous amount of work and money into this business because, again, inventory is everything. As De Beers always said, you want to own diamonds, and that's the business that they got into. So we try to bring to you the most amazing diamonds, but where we do have diamonds that start at $15,000 and diamonds that go up to the 10, 20, 30, 40 million range, most of our clients that invest in diamonds invest under $100,000. So you don't have to be a multimillionaire to be in the diamond market. In fact, a $20,000 yellow diamond in 10 years from now will be worth about $80,000. You tell me any other investment that will do better than that for you, and there is no risk to the investment. They never, ever go down in value because there's hardly any of them available.
The most secure and profitable investment, millions of years in the making, rare colored diamonds, and obviously it's nature's art. Private, portable, stable wealth. Connect with Harold about rare colored diamonds at 1-800-432-1022. You look at what we've gone through over the last 10 years. We've had, obviously, the financial crisis, and here we are today with federal reserves all over the world just trying to do anything to get the economies of their specific countries going. They're debasing their currency. They're stealing money out of bank accounts. It's just a very, very crazy time. And then, of course, geopolitically, we had Syria and Israel going at it during the week. And we can't forget a couple of weeks ago, North Korea was a concern. Can't forget about Iran. It's just a very dicey time in the world, not only financially, but geopolitically. And now is the time to invest in hard assets like gold and silver. And the company Harold recommends you use is Worldwide Precious Metals, a Canadian company in business for over 10 years. And for those that are looking for gold and silver, you may be paying premiums and lining up elsewhere, but because of their worldwide connections, Worldwide Precious Metals will get the gold and silver to you need. Speak with them. 1-866-623-2002, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com. Don't forget, instant liquidity in and out of the market with a phone call, secure storage insured to the full value of your investment, 24/7 online access, and you'll have the use of a full-time precious metals expert. If you do not get our precious metals special reports in our newsletter every week, get them from Worldwide. WWPMC.com, 1-866-623-2002. And Harold, we have about 30 seconds left. A lot of people right now are sort of paralyzed. They're not too sure what to do, but sitting back and doing nothing really is not an option.
No, it isn't. You got to get proactive, but you got to be smart about this whole thing. So again, I would be conservative. I would not take unnecessary risks. I would not listen to what the media says because they're only going to confuse you. Do what your heart is telling you to do. You know how dangerous things are out there at this time. So again, most important thing is to have assets that you hold close to you. Gold, silver, and diamonds are going to get you through these difficult times, and we're going to end up making an awful lot of money. I just want to wish everybody a wonderful weekend, a very profitable day, and to all the moms out there, it's your day on Sunday. Have a phenomenal Mother's Day.
Thank you very much, Harold Siegel.
It is my pleasure.
Yes, happy Mother's Day to all the moms. Connect with Harold at rarecoloreddiamonds.com. The website, it's like going to a museum. Telephone number 1-800-432-1022. For precious metals, WWPMC.com, 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.